Good morning, everybody. It is Wednesday, January 3rd, 2024, 8:45 a.m., and no one wants to open this market today. You know why no one wants to open this market today? Because we are seeing one of the broader sell-offs that we have not seen in the past 8 weeks. And it's pretty red. I've got a lot of reasons for why it's red. We've got a lot of stuff to discuss. We've got one major article that came out this morning, because this is what happens when you're in the world of finance. You get one article that's published by somewhat of a reputable source, and that article permeates throughout the entire financial sector, and it then compounds a certain asset to fall, which then causes other assets to fall, and then you get a red market on a day coming after a red market, where the momentum just builds on the momentum and we get red. And so that's what we're seeing right now today in the market. Folks, Bitcoin is down about 5%. That is taking all the miners down. That is taking all the Coinbases down, the Robinhoods of the world down. So the Bitcoin companies are down. We are seeing the general stock market. S&P actually not down as much as you would imagine. S&P is down about 0.33%. You would expect it would be a little bit more, but there are a lot of stocks that are red. MicroStrategy is red. QQQ is red. Sofi down 6.75% in the pre-market, pretty bad. Palantir at 16.15 in the pre-market's down 3%. So we got a lot to talk about, a lot to discuss why this is happening, and maybe if this dip that we're seeing actually is the dip that a lot of people have been waiting for in terms of the sideline money. They didn't want to buy Palantir at 18, maybe at 16 it's a lot more attractive. Or is this dip one of those dips that continues to go down in order for people to actually get in, meaning people aren't going to get their money in and stop the bleeding today? We're going to find out at 9:30. We're going to find out at 9:30 and see what happens. Theo, Top Dasher, Gift Magic, Zelena, hello from Germany. Admit, do you not regret selling Palantir on 21 USD? No, this is actually a great question. I'll talk about it more later. But again, my philosophy with Palantir is hold this sucker till the end of time. Right? Like, so for me, it's really not about that. There's other stocks I sold when we were at, I guess, the peak of November, December, right? I got out a lot of options and things like that. For Palantir, it's one of those things where you just hold it, you leave it there, you don't look at it, you don't care about it, because trying to time it is just incredibly difficult. So look, it was a good sell for people that got it at $21. It was a great sell. Now you got to try to get back in. And for me, it's just, I just want to reduce my average. I have been saying consistently, guys, I'm not buying until we get to 15. You guys have heard me say that every day for the past probably 2 months now. And I got a lot of shit from a lot of people saying, oh, you need to just increase your share allocates. Like, at some level, you got to have some discipline as an investor, and 15 is my discipline. So we'll see if we get there. We might not get there. But as of now, the market is definitely heading towards a red direction. Ken, Brad Appeal, Sethi Roth, Gerald, Kim, Zokol, Theo, Mario Luna, Missy, Broccoli Brob, Reza, Jason, Jamie, Bogdan, James, Dave, Johnny Mack, Jared, Imnot, Michael Johnson, Edmund Z, Sky God, Eric, Dexter Tan, Rocky Roan, Iceman JJ, Vishal, Parish, Martin, N4, Han Soria. Thank you all for being here. Let's get into it. Let's get into the market open. Martin says, people waited to take profits in 2024. Now they don't pay taxes on gains until 2025. I agree. And honestly, that's the first comment we can start with. I think a lot of the broad market sell-off is primarily due to the fact that people are taking their damn profits that they didn't take in 2023. I mean, honestly, that's like a really good point that Martin makes, because it's pretty logical. The reason I think the sell-off is happening is because a lot of people at the end of the day are realizing that they are sitting on a lot of gains. The market did very well in in November and December. And as a result of that, people didn't want to take those. I mean, even myself, I remember I was like, if I take some profits here, that's going to get added. I already knew what my profit loss was for the year. So I was like, if I actually take some profits here, which I actually I did end up doing, I do that, it would increase my tax bill. So I think a lot of people are just like, all right, well, now 2024, I don't have to worry about this for another year. Let me take some profits right now, which is why my general thoughts on the sell-off before we get into the main article, I think that started everything today. So we'll talk about that in a second. My general thoughts on the sell-off right now are twofold. I believe what's going on right now are people are taking their profits that they didn't take in 2023, which begs the question, why are they taking their profits now if they believe the market's going to continue to go higher? Well, I think average people think even if the market continues to go higher, I deserve to get some of the gains based on the performance that I did last year. And as a result of that, the market can rip another 10%, but I should be able to take my profits. Okay. If that's the case, then there are another group of people that have not been able to participate in the market rally. These are the people that have been stuck in money market funds. These are the people that were very conservative. These are people that were scared in October, November, December to be able to put their money into the markets. In October, we got some much lower lows than this, right? We were at like 410 on the S&P 500. Right now, we're still at 470. So those are the people that are looking to get back into the market in order to establish some positioning to be able to gain some to be able to gain some returns. Here is the fundamental question. I think at 9:30 we're going to start figuring this out if this is the case. Is the market sell-off we're seeing right now, SoFi down a cumulative 9% in the past couple of days? Is that type of a market sell-off enough to get all those people that did not get into the market in 2023 and definitely did not participate in any of the bull rally? Is that enough to get them back in? My gut feeling tells me there's a certain part of them that are going to be like, yes, SoFi at 890 is way better than SoFi at 1020. So I'm going to start DCAing at least. The problem is, and this is the perpetual problem of being a bear, this is like the gift and the curse, is that when the market goes down, you look like a genius, right? And so if you weren't buying the November, December rally, your argument is like, well, all those gains are going to be taken away. I don't know if those gains are going to be taken away. I think it would be hard pressed to imagine all those gains go away. But if you didn't buy then, and then the market starts turning red, and your kind of confirmation bias sets in, why would you buy back into the market? Because you're like, well, no, I was a genius. I was right. I knew this market was frothy. I knew it was bad. It's going to come back down. And then you're going to wait till 420 or 410 on the S&P, whatever you're waiting to be able to allocate. You're waiting for $6 on SoFi, $13 on Palantir, whatever you're waiting for. That's going to be the debate over the next couple of weeks. The debate is going to be, are the dip buyers ready to buy the dip? Because they know at a fundamental level, they know that this market is sound, that this market is ready to go, that Jay Powell's cutting the rates, that inflation's coming down, and that the actual bull narrative is still intact. And as a result of that, they're smart enough to get back into the market and be able to allocate capital, which is personally what I think is the case. I think the market is still fundamentally sound. Inflation is going to come down, and we are going to see that bull rally happen in 2024. Or do they feel that it's going to take a long time for that thesis to play out? And if it's going to take a long time for that thesis to play out, then they're going to wait until they really let the world bleed and burn until they allocate their capital back into the market. One or the other is going to happen, and by 9:30 we will see where the market at least wants to start to go. We got Eric that says we got 15% down by the summer. SoFi going to $6. Imnop says I'm not stuck in money markets right now. I'm still making 5%. Yeah, I mean, look, it really depends on if people that are either on the sidelines or have had some money waiting for a long time want to get back and play with the big boys. So we're going to see how this plays off. But that is my general thesis. I think that right now, by 9:30, we're going to know if this dip is a dip that wants to be bought. We're already recovering a little bit. We'll talk about it in a second. We're up a little bit more from when we were down. And I think, on a red day, everyone thinks, well, the red's just going to continue. You've got to remember, there are billions and billions of dollars waiting to buy up some of these assets, right? And they would much rather love Google at a 135 than at a 140, right? And, this is how a lot of these hedge funds think. So the question becomes, what is the reason for a profound sell-off? And the only reason I can come up with over the past couple of days has been people want to take some profits. There's nothing fundamental there. We didn't get any job numbers or things like that. We do have the JOLTS report coming out today, but we didn't get any real numbers, nothing that I've been looking at. PMI data, there's no inflation data, nothing across the world that's like, oh my goodness, this is a sell your stocks event. You need to reposition yourself. But none of that data is coming out. The only data has been that people want to take some profits, which is reasonable at the end of the day for people to take profits. Okay, let's go into this article. This is the article that we need to discuss that's going to start off the market or the market open, which is Bitcoin ETF not being approved. Okay, so this was a report from Matrixport. Yeah, Matrixport. I don't know what analyst this is. I don't know how big of a firm this is, but apparently they're enough of an important firm for them to make the argument that the SEC will reject all Bitcoin spot ETFs in January. That is an analyst by Matrixport. And his name is Marcus Thelian. He said that the Securities and Exchange Commission will likely reject all Bitcoin ETF spot proposals this month. He argued that applications still fall short of a critical requirement that must be met before the SEC can approve them. In contrast to a broad market consensus, Matrixport's analyst Marcus Thiel anticipates that the SEC will decline the Bitcoin ETF. Despite frequent meetings of the updated S1 prospectuses between filers and the SEC in recent weeks, Thielen pointed out in a report that these applications will still fall short of a critical requirement that must be met before the SEC can approve them. He's basing his perspective on the political dynamics and compliance concerns. The analyst argued that while an ETF would help enable crypto to take off in the US, the SEC's chair still sees the industry as needing more stringent compliance. Quote, SEC Chair Gary Gensler is not embracing crypto in the US, and it might even be a very long shot to expect that he would vote to approve Bitcoin spot ETFs. This might be fulfilled by Q2 2024, but we expect the SEC to reject all proposals in January. That right there, folks, and we'll talk about the SoFi downgrade in a second. We'll talk about that. But that right there is why we are seeing Bitcoin in particular fall 6%. Remember how yesterday we were so excited Bitcoin was at 45,800? Yeah, Bitcoin has lost all those gains. It's at 42,493, which means the miners have also lost a lot of their gains, and we're going to talk about them. CleanSpark down 10.85%, Riot down 8.7%, Coinbase is at 140 again. It's just insane. It's pretty bad. So this is what we're seeing on Bitcoin. Now, here's my question about this Matrixport analyst. He is making a contrarian argument because all the other analysis I've seen is that no, the ETF's getting approved. Cathie Wood bought 4.3 million shares of a Bitcoin ETF in anticipation for this ETF to get approved. Now, what inside information does Cathie have? She's trying to get an ARK BTC ETF approved as well. And her argument on Bloomberg was that the discussion she's having with the SEC is a technical discussion, not a qualitative discussion, which means it's more prescriptive versus descriptive. The idea is what are the small technicalities and idiosyncrasies we need to solve in order to get this ETF approved versus the qualitative nature of if this is even a asset that is allowed to be owned by the general public, because that is the whole point of the Bitcoin ETF, is that the general public is able to get access and exposure to what's going on in regard to the world of crypto. And as a result of that, maybe Cathie's wrong, but I don't think she buys that many shares of Bito. Is Bito down today? Yeah, Bito's down 5%. Look at that. I don't think she buys 4 million shares of this bad boy. That's basically $80 million, 4 times 20, $80 million bucks that she spent on this bad boy. If she thinks it's going to get disapproved, because if it's not getting approved, this thing's going to 15, and she's going to lose, $10-15 million like on paper. That's not going to be fun for Cathie, right? It's definitely not going to be fun. So from that perspective, I don't know. I think I would assume that there are people that are also correct. If the Matrixport analysis has some credibility, I would think other people have some credibility. Nonetheless, that report is what set Bitcoin down. That is the report. It was published on a pretty reputable a website called The Block, which is like the main crypto, like Wall Street Journal, I guess. Now, ironically, this firm also said that the Bitcoin ETF will be approved the other day. So it's like, I don't even know what to believe at this point. But nonetheless, we are seeing that sell-off. So you look at the market, you got CleanSpark down 11%, you got Riot down 9%, you got Coinbase down 7%, MicroStrategy down 6%. Let's go to, what was the other one? Let's go to Marathon. Marathon is down 9.51%. Now, there are a lot of the Bitcoin people, okay? A lot of the Bitcoin people that believe that this is all BS. So you got Mike Alfred. This guy's been in Bitcoin for a long time. LOL, BlackRock put out a fake Matrixport report to get a lower seeding price. Classic Larry. This is what the Bitcoin hodlers are saying. The Bitcoin hodlers are saying this is stupid. This is dumb. I follow a bunch of them on Twitter. I'm trying to understand their perspective. And their argument is like, this is just a dumb report to get people to not want to buy Bitcoin, to kind of feel a little scared, to get retail to shake out. And ironically, it would be very funny if the ETF gets approved this month. And then Bitcoin, just imagine it jumps to like 50,000, 52,000 because that ETF actually is that event that people have been talking about. And a lot of people would have sold off their Bitcoin off of a one-page report by a speculator against a variety of reports that is saying that it's incorrect. Another interesting thing right here, if we look at this, is the nature of this Matrixport analyst. This guy left Matrixport in December 2023, and he's now selling his own newsletter. So as you can see on his LinkedIn, he was part of the firm from October 22 to December 2023. Matrixport has about $10 billion in assets, a very big, financial firm. And he started a firm called 10X Research, head of research / crypto, in December of 2023. So 2 months ago, less than 1 month ago, he started his own firm. One could argue if you start your own firm, you're going to want to, say something that gets some attention on your firm because you are starting a new business and every new business needs attention. And if you need attention, then what if you say something, given your previous credibility in the crypto space, that is salacious, and more people get to know who you are, you get more clicks, you get more discovery, and all the bears start to love you because all the bears have, hated the fact that crypto has gone up. And, you get a little bit of a name for yourself. So I have no idea. I have not followed this guy. I have no idea who the heck he is, but that one analyst, I mean, literally, if you're wondering why Bitcoin is down today, that one analyst and that one report hit the airwaves and everyone was like, all right, let me get the hell out of Bitcoin because this thing is going to tank and it's going to be in a bad place. Another reason why the Matrix port, I should say, I'm getting it wrong. Matrix port is claiming that the ETF will be disapproved is because 5 of the voting commissioners are Democrats. And so their argument is that Democrats don't like crypto and that they're kind of anti-crypto. You see with the Elizabeth Warrens. I mean, like Elizabeth Warren should hate Jamie Dimon. Like literally Jamie Dimon is the antithesis of what Elizabeth Warren should stand for. Ironically, that's probably not true because Elizabeth Warren is actually rich. But they both agree that crypto sucks. And that should tell you something. When someone you hate agrees with you on something you both hate, maybe you're the hatred of the thing that both of you have, maybe it's actually wrong. Maybe it's actually you guys just being way too institutional and elitist versus being on the same page of something. So, Elizabeth Warren doesn't like it. A lot of the Democrats doesn't like it. So part of the Matrix report was that there are a bunch of people that don't like this nature of this idea of crypto, and a lot of the voting commissioners for the ETF are Democrats, and if they don't like it, well, then it's going to be in a tough position. You got Matt saying he's adding more CleanSpark today. I mean, look, if you've been waiting to get more into crypto, if you've been waiting for a real position, which I think a lot of people have been waiting for a position at the end of the day, the miners have finally come down. I think a lot of people have been waiting to get into the miners. Something like Robinhood. I mean, look at Robinhood right now in the pre-markets. Robinhood is down to 1161, down 6.18%. I think a lot of people that have been waiting for a Robinhood dip, because I think Robinhood is fundamentally sound. I think it's going to be in a great position. Now their market cap is going to be literally half of cash at down from 1237. I think this is a dip as well that can get a lot of people excited. So the question is going to be, the real question is going to be, is this dip going to get bought or does it get sold off? Like, I think that's the biggest thing in the world, because it's like, do people want to participate at CleanSpark at $9, or are they waiting for $7? Because then you got to be really greedy waiting for it at 7, or you have to be a dip buyer at 9. And either the money that's waiting on the sidelines is ready to buy that dip, or they're ready to just watch it burn. It is going to be one of the most exciting market opens, because there is a 50-50 chance CleanSpark could rebound back up to $11 and get bought up on the dip, or they tank to $7. I mean, like it's very reasonable that could happen in both scenarios. Could it be flat? Sure, it could be flat, but it's going to be really interesting at 9:30 to see how this market actually opens up, because we've got a lot of momentum towards the downside. End phase is down. Ironically, you guys want to know what's up? What's actually up today is Verizon. Verizon is up. I wish Chris was in the chat because he would get a kick out of this. Now, why is Verizon up at $39.59? Because it was undervalued, right? So I think we can all objectively agree Verizon was undervalued, down from $50 and at one point right down at $30. B, you're getting a rotation from a little bit of growth to value. And it's not just Verizon. You've got PFE, Pfizer, they are green, up 1.174%. You got Dollar General, they are green, up 0.16%. You got Moderna. I would bet that they are green, up 0.44%. I'm going to take a bet and say Nike's green, even though I don't know, but Nike's more of that value type of stock. Nike's red. Never mind. Nike's red. Nike, even though Nike's a little bit more value, their earnings were just bad, so Nike's still red. Put some other value stocks in the chat. And I'm going to look them up right now and see how green that they are, because I would imagine that if Verizon, Pfizer, Dollar General, these companies are green, you would imagine some of these other stocks are going to be green as well, with the rotation from growth to value. Let's talk about Palantir. So Palantir is at $16.08 right now. Okay, Palantir is at $16.08. I am not scared. I am actually very happy, quite frankly. I don't want to be super happy, but I've been waiting for 15 for a very long time. And I think, it's 7 cents away from the 15s. If we get a sell-off today, it's going to hit 15 if we get a sell-off. Now, if we get a rebound very quickly, then we will rebound from that. I don't know if Palantir has the momentum to rebound above from 15 once it touches there, because if we have a broad market sell-off, we're just going to have a broad market sell-off. Everything's going to be red. So we'll see what happens. We'll talk about Palantir in a second. Let me look at some of these other stocks you guys mentioned, then we'll go back into Palantir. Hershey's, let's see them. Hershey's, are they green? Hershey's is green. Look at that. PayPal. Okay, PayPal's value, but PayPal's PayPal. We know what PayPal is. PayPal's red. Okay, so we didn't expect PayPal to be red. PSTG. Okay, let's look at that one. Is PSTG green? Pure Storage is green. Oh my goodness. What the hell is Pure Storage up 5%? Is that like a storage center? Is that where like people pay like $100 a month to like store their stuff? Wow. Okay, that's up 5%. And then Toyota's TM. Toyota's red, but it's not that red. Pfizer is green. It dropped below 16 a second earlier. Oh wow, I didn't see that. Yeah, so I think we're probably seeing below 16 today. AAP, let's look at that. AAP, Advanced Auto Parts is red, but it's barely red. So it looks like a lot of value stocks at the end of the day are turning green, and it might seem that investors are looking for allocation away from growth, somewhere they can hide out, somewhere that's safe, and that's somewhere that's a little bit better for them to be in. Also, financials yesterday were really green. I didn't get to talk about it too much, but we had Bank of America that's red today, but as you look at it yesterday, it was green. XLF was green yesterday. Truist just exploded yesterday. Truist was good. So financials are down today, but as you can see, the blow on financials is not that bad, down 0.33% compared to some of these other stocks that were red. Okay, let's go back to Palantir. So Palantir, $16.07 in the pre-market. Look, if we hit 15s, I wouldn't be crazy to buy at 15.90, 15.95, because if we hit 15.95, we're probably getting a little bit lower. So I would be, I would proceed with caution, because if we get this low, this is not like, oh my God, I have to buy the dip. If we get this low, there are going to be a lot of sell-offs that are going to happen on the stock. Remember, Palantir is a retail-driven stock. A lot of retail bought this thing at 19. They had no idea what it was. I remember literally seeing people buy thousands of shares at 19 and $20 just for the hell of it, because they thought it was going to the moon. They thought it was the next AI play, yada, yada, yada. There's a lot of people that don't know what Palantir does. They have no understanding of Palantir. And as a result of that, they are going to be selling it off today, because they do not want to stay in a stock that they have no idea what they're owning. And if they see it go red, they're going to think it's going to keep going down. It's going to go down. I don't think the institutions are massively selling off today. Quite frankly, I think the institutions would be really looking for a nice dip buy if we get it today. But in general, we are going to see a little bit more volatility here. And, if we can get to that low 15s, that is my real price target. When I said 15 is my price target, I didn't mean 15.93. I meant like $15 if we can get there. So that is still what I am looking for. And look, maybe we don't get there. I've been buying a little bit here and there. You guys have been seeing, I bought 25 shares yesterday at 16.70, but the big buy is waiting for that $15 price range, and we're going to see if we get there. In general, look, it could happen. It could very well happen, but it could also rebound. And that's why I think if Palantir rebounds throughout the day, that means a lot of other companies are rebounding. It's not going to be Palantir specific. We're going to see a general market kind of rebound as the market opens, but it's all going to be contingent, quite frankly, on if there is the appetite for this dip to get bought. And maybe there is, but maybe there's not. And we're going to have to see how it goes from there. What price are we looking at SoFi? Okay, let's talk about SoFi. So SoFi, we got to talk about them. These guys, so I do now a market close, everybody. For those that don't know, we are streaming 4 times a day. Today we're going to have the podcast with TJ around 6 p.m. and market close starts at 3:45 p.m. On the market close, at the very end of the market close yesterday, SoFi tanked like almost 2.5%. And I was just like, wait a second, it was already down 5% today. Why is it down again? And the reason it was down again, the sneaky little reason that SoFi, let me just show it on the Webull real quick and then I'll show you. SoFi was down. SoFi right now as well, down 7% in the pre-market after being down 3% yesterday, $8.97. Again, we've got to see if the market has the appetite to continue to give SoFi some room. The reason we saw SoFi decline is because an analyst was being very anal about SoFi, and he downgraded the stock. Now, analysts always downgrade stocks. I didn't know this guy was that big of a deal, but Michael Perito, okay, sounds like he's like part of the Italian mafia or something. Michael Perito, success rate 64%, average return 15% on his calls. Number 354 out of 8,665 Wall Street analysts, according to TipRanks, which is, it's pretty decent. Objectively, those are the numbers. He's made calls. He's gotten those calls right. And he's made calls particularly on financial companies, bank stocks. He doesn't really do tech or anything like that. Look at his ratings for SoFi. So he said to hold SoFi while it was going up. And then at the very top, at about $11, he said to sell the sucker. And obviously it came down. Then he said to hold when it was at the lows in November. We were talking about 680, 730. And now he wrote it all the way to the top. He's saying to sell at $9.65. He is calling for a 32% downside on SoFi on it coming down. And essentially, he's been more bullish versus bearish. He's not a sell-side analyst. 64% success rating, only analyzes banks, and he called the SoFi top back in August. So my question is he right here? Is this sell a similar to one to when he called the August top? And look, he could be right on SoFi, not even because he understands SoFi, but because the macro could shit the bed. And that's why SoFi actually does deserve to be sold off. Deserve meaning, just if the market's selling off, SoFi is going to sell off. And he could be right on top of that. Or is he wrong as SoFi is going to report GAAP profits in about 60 days? I think that's the question you have to ask yourself in the context of SoFi, given for what we're seeing right now. And so that is also the reason for why SoFi is down right now. In general, my thoughts on this, and I said this yesterday on the market close, is that I felt SoFi ran up way too quickly. I mean, guys, it went from 670 to 1020 in the matter of 2 weeks. And there was nothing fundamental around SoFi going there. Again, with like a Robinhood, a Coinbase, there's something very fundamental. Their business is allocated towards crypto. If crypto is going higher, their transaction volumes are going to be higher. It's a very obvious reason. Now, on the downside, it's also very obvious why they go down. So, it made a lot of sense. SoFi was pure momentum and pure chasing. Remember, this is a company that is 14% short. They were 16.5% short 2 weeks ago. So the shorts have covered to an extent, but you could argue that if you're 14% short, those shorts aren't just leaving anytime soon. If anything, they're doubling down as you see more market momentum and more market contraction. And right now you're down 10% in the past 2 days. I would imagine those shorts are feeling pretty good and they are adding to their short position versus being scared. Because again, it's not like there was a reason for SoFi to balloon up to $10 outside of the fact that J-Powell pivoted. But J-Powell pivoting is not really an investment thesis at the end of the day. Now, granted, SoFi is going to be profitable soon. And because SoFi is going to be profitable soon, I do think that the shorts are playing with fire here, because once they are profitable, this will be a bank that is growing at close to 40% year over year on revenues. Members are going to be at 800,000 something members every quarter. Deposits are going to be close to 3 billion deposits a quarter. And you got, at the end of the day, a company, a bank that is profitable, that probably deserves somewhat of a premium, that has a tech company out inside of it that's not really showcased any value yet, but it will eventually. And the market might give it a little bit higher of a premium. I mean, imagining SoFi at $12 by the end of 2024, it's not insane, So we will see what happens, but that is why we got the downgrade. And now at 9:30, again, it's going to be very interesting to see how bad does the market really take this bad boy down. Or he just wants to buy at a lower price. That is true. I mean, that's the same thing with Bitcoin, right? Maybe BlackRock really wants to buy at a lower price, and they told this new analyst dude, hey, publish a report because we're about to have an ETF approval and we don't want to buy it at 45,000. We would much rather buy it at 38,000. So, I mean, that is one thing we can't ignore. We cannot ignore that there is extreme market manipulation, and obviously the biggest actors in the world want to get the lowest prices in the world. And as a result of that, they will do everything they need to do to try to get those lower prices. So that could also be a reason why we're seeing some of the downside we're seeing here. CleanSpark now down about 12% in the pre-markets. It's going to be a bloody market open for those that are in Bitcoin miners. There are some people that have allocated a lot of money to Bitcoin miners. I mean, you guys know, for me, it's a $5,000 position, very small position in part of the portfolio. It is what it is. For me, it's a gamble. If Bitcoin goes to the moon, we'll hold it and we'll make a lot of money. If Bitcoin tanks, then you lose $5,000, you lose $5,000. It's not that big of a deal. But there are other people that have, really allocated a lot to the miners. And so the question becomes, is this a dip that really gets bad, or is this a dip that gets bought up and, their averages get even better and then the miners do really well? So 9:30, we're going to figure out kind of where that's going and how that's looking. Let's look at Mag 7. NVIDIA currently is down 1.55%. Google is down 1%. Amazon is down 0.75%. Meta is down 1.17%. And Apple, we all know Apple down another 0.82% to start off the pre-markets. Apple was down 3.58% yesterday. Apple was in a tough position. Apple was in a very tough position. Let's get some coverage on Apple and get an understanding of what's going. Here's Alex Kavrovitz, who believes that there's no real reason for this dip and that Apple will prevail. Let's get a thought and perspective from him.
A pretty tough day after that Barclays downgrade. Some people attributed it to profit taking. Of course, Apple up about 50% last year. Others to longer-term concerns about their hardware business. What camp do you fall in?
I think there's definitely profit taking here. You definitely can't take that out of the picture. But I think the Barclays note pointed at something that a lot of people are worried about, and that's that iPhone sales growth is going to slow down. And for Apple, they're the iPhone company. Everything is all in on the iPhone. And if you see slowness there, you have to ask if they have enough to make up for it. And to me, I think that's the bigger issue. You see that they're talking about slowness in 15 and already 16. And if you don't have the iPhone carrying you in your Apple, then what are you doing? And I think that's the real question for the company right now.
Okay, one, I absolutely agree with him, and I'll talk about that after the video is over. But two, I don't understand how you can be on live television, broadcast it to hundreds of thousands of people, and be in, as Ty Gordon says, a bathroom and not have a real mic. How is this happening? I don't get it. I don't get it, but it is what it is.
So are you worried about a slowdown in growth for the iPhone because of just it plateauing? I mean, so many people have iPhones, or is China one of the reasons that you're concerned?
I would say the biggest issue here is the upgrade cycle, right? People have the iPhone 15, it looks like the 14, and that will probably look like the 16. So you're getting to a point where people are upgrading just much more slowly. And when you're in that situation, you just can't afford to have any other potential issues along the way. You don't want to have China as a potential risk factor. And unfortunately for Apple, it's this perfect storm where you're having the China issue hit and the upgrade cycle story start to come to fruition. And so I would say the upgrade cycle is the real problem, but now any other blip causes serious issues, and that's what we're seeing with the company.
Damn it. It was only 20 seconds. It was only 20 seconds on the mute. It was only 20 seconds on the mute. Literally time it. It was 20 seconds. I found it really quickly. It was only 20 seconds. So that was it was literally 20 seconds, dude. It was 20 freaking seconds. We had to do it at least once starting in 2024, right? We needed at least one of those moments to happen. God knows how many more times it's going to happen again. Remember, I told you guys this story a long time ago. I remember watching Meet Kevin on his market open for 11 minutes. This man was on mute. I remember this was like 2021, some random morning, and he like stops playing some video, and 11 minutes go by. He's doing the most complex financial analysis of his life. He is speaking his heart out, and then he notices the look on his face. I remember it like it was yesterday, that 11 minutes had gone by, and he didn't check the chat. So we had 20 seconds. We had 20 seconds. That was not too bad. Okay, what I was saying was this iPhone, I can't imagine it getting better. I just can't, like, what does this iPhone do? Well, it tells me all the notifications of stocks that are down. So that's great, right? Like it informs me everything that I need to know. I don't know if an iPhone 16 is going to be valuable by any sense of the imagination, given what the iPhone 15 is. And Apple would have to have some massive innovation, which I don't expect them to be able to do because it's really hard to innovate to be able to create some device that's even better. So if the iPhone 16 is not going to be magnificent, if that's not going to drive the sales, if the iPhone 15 sales are kind of and they're not that good, services is the only valuable area for growth. If services is not growing dramatically, then you got the Vision Pro. If Vision Pro is not growing dramatically, because who the hell is buying this $3,500 thing? Yes, some people will buy it, but not like millions and millions of people. Then the only thing left for me on the Apple thesis is the car. And it seems like Tim Cook could have had one of the world's most valuable companies in the history of planet Earth if he had just taken the meeting with Tesla in 2018 when Elon called him. Tim Cook had leverage. Elon had no leverage, and he could have bought Tesla, and it would have been like the greatest thing Tim Cook has ever done. He chose not to take that meeting, and he chose to focus on watches instead. So from that perspective, I don't know, dude. It's really hard to justify the Apple growth. Granted, I do think this dip in Apple will be bought because the market loves Apple at the end of the day. The market wants to stay with Apple. I know they're not growing and they're trading at a higher PE, but I do think the dip will eventually be bought and Apple will be fine. It's just, as of right now, it's a lot of short-term volatility, which is tough. Imnop says, Amit, at least you pay attention to our chat so you catch being muted fast with our help. Yes, that is true. I mean, like literally the chat is like, the chat's like, it's like that peripheral vision. No matter what I'm doing, I'm always looking on the chat. It's just sometimes you get into the zone and you forget to realize you're actually muted. Amit, what mine are you in? Is it just CLSK? Yes, it is just Clean Spark. That's not acting so clean today. It's acting very naughty, very dirty today. And it needs to act a little bit better. So we will see. 9:30 is going to be very interesting. It's going to be very interesting because either this shit moons or this thing tanks. And in 10 minutes, we're gonna know. Let's get an update on the nature of the Mag 7 and what the impact it has on the broader markets. And let's see how these 7 stocks are going to drive the rest of the market going into 2024.
Expects to see a broadening out of market participation this year, as well as divergence in returns among big tech firms. For more on the markets, let's bring in Michael Landsberg, Chief Investment Officer of Landsberg Bennett Private Wealth Management. Good to see you, Michael.
Good to be here.
Yo, why does this guy look like Megamind? You guys know what I'm talking about? The Megamind character from that movie? Tell me he doesn't look like Megamind. He looks like him.
Of Landsberg Bennett Private Wealth Management. Good to see you, Michael.
Good to be here.
Yesterday must have been a welcome little opening for the year. If you're expecting a broadening out of the market, the equal-weighted S&P was about flat. The NASDAQ 100 was down 1.7%. Healthcare was up after lagging last year. So is this the kind of activity that we can count on continuing, or is it just a little bit of maybe a brief catch-up move?
I think a little bit of both. I think actually, given what we had yesterday, obviously, reports of the downgrade on Apple. There's some concerns about Apple in particular, but I think it makes sense to broaden out some of the tech exposure. Utilities were good yesterday, healthcare, and some of your areas that have been really big performers last year. You're going to need a broadening out. 7 stocks can't really drive the market performance for the whole year. It's not helpful.
Well, that's fair, although since October, it hasn't really been that way, right? I mean, the equal-weighted S&P finished up 12% or something last year. I think that half of the S&P was up 15% last year. So I guess the question is, how do you have to read the broader economy to feel as if most stocks can participate, or cyclical groups or laggard groups can catch up?
Well, I think a lot of that S&P, there's a good group of the stocks that are down 20, 30% this year. So there has been a more narrow breadth than it should be. I think we're slowing. I think if we saw the price of oil come down prior to what's going on in the Red Sea, it's a slowing economy. Oil prices are starting to go down. I think you're going to see, almost a negative GDP in the first quarter, very close to zero here. But there's going to be areas that have growth. In a slow-growing economy, stocks that grow do really, really well. And it's just hard to find those. When you can find them, you want to be able to hold on to those. And I think that's where Apple may run into some problems. They had negative, earnings growth for the last year. Stock was still up 50%. I don't think that can continue in 24.
And I think he might end up being right about that, dude. You can't have negatives, or it's funny, even as he says it. Apple was up 50% last year, and they had negative earnings growth. And it's one could argue, well, they were recovering from some of the lows, but even that recovery from the lows, they were not growing through that recovery. At least some of the other big tech companies were growing, even if they were doing cost-cutting measures. So, I mean, I don't know. He makes a point that it's going to be hard for Mag 7 to continue to get the market to go higher, which is why the rally is going to extend to some other broader sectors if the rally continues. But we're going to have to see how that actually plays out, given Mag 7 has been utilized pretty aggressively over the past couple of months. Palantir 1607 right now in the pre-market. We've got volume on Palantir. Where's the volume? At 764,000 shares in the pre-market right now. Sofi volume 1.22 million in the pre-market. Nvidia 327,000. Amazon 147,000. We are seeing some decent volume on these stocks. A lot of it is sell side pressure, as we're seeing that these stocks are red. MicroStrategy was very interesting yesterday. They are down 6%, $642. They were up 8% yesterday. Coinbase was down. Michael Saylor actually sold about $215 million of MicroStrategy stock. And his selling of the stock was primarily due to selling for buying more Bitcoin. So it wasn't that big of a deal. He's made it very clear that when he sells for Bitcoin. But he did indeed sell, I think, 15,000 shares or something like that. And his 15,000 shares is going to be allocated towards the Bitcoin level. Let's take a look at him actually talking about this as well, so people can see what he did. And then we'll go a little bit deeper into what's going on with their stock. But MicroStrategy was up yesterday, even though Coinbase was down. Today, both of those being down as Bitcoin dropped 6% on the day.
Question is for Michael. The 10Q disclosed.
I was granted a stock option in 2014 with respect to 400,000 shares, which is going to expire next April if I don't exercise it by then. For almost a decade now, at my request, the company has only paid me a $1 salary, and I have chosen not to be eligible for any cash bonuses. Exercising this option will allow me to address some financial obligations as well as to acquire additional Bitcoin from my personal account. Under my trading plan, I plan to exercise and sell 5,000 shares on each trading day, beginning on January 2nd, 2024. And ending on April 25th, subject to a minimum price condition. This means the sale will take place over almost 4 months. If you'd like more details about the plan, I would refer you to the 10Q. I continue to be optimistic about MicroStrategy's prospects, and should note that my equity stake in the company after these sales will remain very significant.
So it is interesting to kind of think of this. He obviously is selling those shares to buy Bitcoin. I think Michael Saylor is one of those people at this point, as I've studied him, that is actually bullish on Bitcoin and wants to buy more and more Bitcoin. I think he owns like 15,000 Bitcoin by himself in his own personal account. So you got Michael Saylor still having a significant equity position even after he sells these shares. He does have a plan that's going to allow him to sell close to 400,000 shares over the next 4 months. And so that will put some pressure on MicroStrategy stock. But as long as Bitcoin does well, then that's going to more than make up for it. On top of that, you got Coinbase insiders. I mean, Coinbase insiders have sold a lot as well. It's just no doubt about it. Coinbase insiders have taken a lot of profits from their sales because the stock has run up about 400%. And honestly, you can't blame them. I mean, they're gonna take some profits, right? But you got MicroStrategy selling a little bit. You got Coinbase selling a little bit. And at the end of the day, the reason these guys are selling is because when they have a stock that's up this much, they're going to have to be able to get some of that momentum. As you can see right here, we got insiders, CFO, Brian Armstrong, all these guys. This is all December 26th, December 22nd, December 19th, December 11th. All these guys selling hundreds of thousands of shares and, making some decent money on that. Now, the sad part about this is a lot of those shares that they're selling is being dumped on retail at the end of the day. I mean, yes, like institutions are buying as well, but if you were buying Coinbase at 180, 175, you were buying the shares of these insiders just same way if you were buying Palantir at $20, you were buying Alex Karp shares because he was dumping them at 2180, 2150. So, this is kind of what happens as these stocks run up. A lot of the insiders that have been waiting for a long time to get liquid, they find liquidity, and that liquidity exists in the broader retail market that is willing to buy these assets at those prices. So I did not touch Coinbase at 175, even though, look, I had a ton of FOMO. I thought this thing was getting a little bit higher as well. The problem was it had run up 4x already. And like that to me was just made it a little bit more scary. On top of that, remember, Coinbase has to still get actual profits from their transaction volumes and their transaction revenues. If they don't actually, find out how to make themselves meaningfully profitable, because they're still not profitable yet, the market is not going to, fully reward them. They have to actually get an operating profit. And so the transaction volumes are going to be high this year, or at least this quarter. The question becomes, how profitable can they become? So look, Coinbase, if you just zoom out, it was at $30. It's at 150. I mean, it's done very, very well. Yes, it's not at 170, but the question is this a dip that you buy at 150? Because now you're thinking, well, the stock's already up 5x. Do I step into this, or do I take some off the table and just wait until it retraces to a broader level? Long term, if you believe Bitcoin's 100,000, 200,000, then Coinbase at 150 is a steal, right? Because Coinbase will move parabolically with Bitcoin. The problem is, do you believe that Bitcoin price is coming soon or not? And most people probably think it's going to take a while for it to get there. QQQ under 400. We got 399 on QQQ. Eric says he still has half his position on Sofi, sold 50% in December. Not a bad sell at all. 399 on QQQ. Again, someone made a bet yesterday. I think I told you guys this maybe on the market close that they made a $10,000 bet that if the QQQ gets to $380, they bought a $10,000 put on the QQQ, or $10,000 worth of $280 strikes puts on the QQQ. If the QQQ gets down to 280, which is a 30% retracement, they would make 300,000. It's actually a really decent hedge. They basically 30x a $10,000 investment. 10,000 is I would say it's a reasonable hedge to put on your portfolio, depending on the nature of the size of your portfolio. And if the QQQ goes down to 280, the entire market's probably going to be down, 10, 15% at least. And if that's the case, you could profit from the upside if you actually have that much downside volatility. So it is, one of those things where if you wanted to hedge your portfolio and allocate, if you have a $100,000 portfolio, you take 10% of that and just throw it into a hedge, maybe you lose that 10 grand. But if the QQQ actually does fall, which means Magnificent Seven, falls dramatically because earnings growth isn't there, which that really is the bear case. It's not really macro, it's earnings growth. Then that is some protection on your portfolio at the end of the day. All right, we got 20 seconds until one of the most exciting market opens of 2024. Why is it exciting? Well, everything's down, and I am very curious on if it's going to get bought up or if it's going to continue to sell off. That's what I am curious for today. Second market open of 2024. We're starting off red. Let's see what happens. Ladies and gentlemen, thank you all for being here. January 3rd, 2024. The stock market is now open. Wake your ass up. Here we go. Let's get into it. Let's get into the good stuff. Apple down 184.54, down 0.61%. Meta 344, down 0.6%. Amazon 149, down 0.268%. Google is red. Nvidia is red. Sofi down 8.245% on the day. Goodness gracious, $8.88 down from another 3% day yesterday. Yesterday was at 974, all the way down to 890 today. Let's see if that dip gets bought, or let's see if it continues to sell off. Palantir 1612. Palantir not falling below 16 yet, down 2.8%, 16.15. We're seeing some of the buy side pressure come in. The dip is being bought. Look at that. Palantir at 16.18. The dip is being bought on Palantir so far. You got a nice, look at that green candle. Look at that. That green candle is forming hard. 16.20 right now. We'll get back to it in a second, but we'll see if it ends up falling down or if it keeps going from there. We got XLF. That's the banking sector. That one is down today as well. Not down as much, but it is still down. Bank of America is down about 1%. Advanced Auto Parts is down 0.91%. PayPal down 2% on the day. Of course, why wouldn't PayPal be down 2% on the day? But PayPal is down 2% on the day. Hershey's 193. That's up. So we got a little bit of a value stock going up a little bit higher, and value is coming up on the day. Nike is down 0.74%. Moderna is at 0.18. Moderna's at what? $108, down 3.5%. Oh, wow. So Moderna turned red. Moderna was green in the morning. Now Moderna is red. Robinhood down 4.28% at 1184, but Robinhood making a bit of a recovery because Robinhood was actually at 1163 at the pre-market. So Robinhood right now at 1187, not bad at all. Marathon is red. Crypto Miner down 8%. Beto, ProShares Bitcoin Strategy ETF, that is red, 6.34%. Rivian is down another 3% after being down 10% yesterday. QQQ 400 recovering a little bit. Coinbase down 5.6%, recovering a little bit. They were down 8%. MicroStrategy down 4.96%, recovering a little bit. They were down about 6%. And CleanSpark also recovering a little bit, only down 8.8%. They were down about 12% as the market was right at the pre-market. Bitcoin now at 42,104. So Bitcoin continuing to fall 6.77%. Riot is down 10% on the day. So we are in a red market, at least in the first couple minutes of the market opening, but it's not as red as I thought it was going to be. I mean, a lot of these companies actually recovering a little bit from their lows. Look at Sofi. Sofi's trying to head back right back to $9, down 7% on the day, but trying to get to that $9 range at $8.95. Palantir as well, holding strong at $16.15, not really going below $16.07 where it was in the pre-market. Let's see what else we have. Arc Innovation falling below 50. AMD at 135. This bad boy was at 148 last week, now at 135. Disney at $90. We also got some Disney news we'll talk about in a little bit. Snapchat 1550 as well. So we got Snapchat down 3.98% of the day. Alibaba actually not too red, down 0.71% at 74, but you would expect it to be down a little bit more. S&P still holding 470. S&P is down about 0.5% today. It is still holding $470, and it's not going down, which is not too bad. And S&P is actually holding that 470 level. Let's look at Enphase. How bad is Enphase? Ooh, okay. Enphase down 4.67% on the day. Enphase was at 135 last week. You know, I had a feeling that Enphase was coming down because I've been saying this a lot on the market open, but their guidance is still crap. And their guidance is not going to get better. And they lowered their guidance 2 weeks ago, and the market still put them at like almost $140. This bad boy bottomed at 72. Obviously didn't deserve to be at 72, but did it deserve to be at 140? Did it deserve to double in a month? I don't know. Less than a month. But Enphase, 124. I think all of us should be happy Enphase is above 100. If you're in the Enphase stock, if it's above 100, I mean, I think that's reasonable because until interest rates come down, solar is not really going to have its moment in the sun. It's gonna take a while for that to happen. Apple is moving up a bit. Okay, let's look at Apple. Where's Apple? We got to look at Tesla as well. Apple 185. Okay, wow. Apple is only down. Look at that. Look at those green candles. Look at that. It's gonna a little bit more buy side pressure. It's gonna be green. Again, the market loves Apple. The market loves Apple, even if they're not growing and they're at a 30 PE negative year-over-year growth. The market loves Apple at the end of the day, and so. I think the Apple dip is one that usually gets bought up, but we'll see how bought up it can get. Look at that green candle forming pretty aggressively right there. You got a lot of at 183. You had a lot of algorithms get triggered, and they bought the stock. And now Apple's green. 185.65. Now Apple is indeed green. Tesla. Let's look at Tesla. Tesla 241. Wow. Okay, so they're down 2.85%. Tesla earnings are going to be really interesting. January 24th, we'll be streaming them live on the channel. Look, those delivery numbers were good. I don't know if the delivery numbers are enough to have a monster earnings for Tesla. I do think that We talked about it yesterday. Their input costs in the raw materials has probably come down just because the cost of lithium has come down. So that should increase their operating margins and their overall profitability. But Q4 earnings for them is going to be significant because this stock's been in the gutter for a while. And obviously, it was at $100, now it's at 240. So it recovered really well in 2023, but it hasn't really participated in the broader market rally. So maybe we do get another dip and it's a really good opportunity for Tesla shareholders, or, it finally breaks through that cycle that it's been in and we get closer to that 270, 280 range on Tesla. Bitcoin, 42,000. Look at CleanSpark, down only 5% today. Wow. CleanSpark is recovering. Wow. Recovery on CleanSpark at 5%. You got Coinbase at 149. That one's also recovering a little bit. Not too bad at all. You got Riot down only 8%. That was down 10%. You got Truist down 2.45%. QQQ back at 400. MicroStrategy down 4.9%. The dip is definitely being bought to an extent. I mean, you would expect it to be down 10, 15% on a lot of these guys, given how volatile they are. The dip is being bought a little bit. HIMS is down 3.6%, but HIMS still above $9. It ballooned yesterday up to 8%. So HIMS is down a little bit today, but yesterday it was up about 8%. Amazon's green. Oh, wow. Amazon's green. Look at that. Amazon is green. And see, this is what I was thinking all morning. By the way, thank you all for being here. 833 people. If you could please like the stream, that would mean the world to me. Please, please, please. If you could hit the like on the stream, that would mean a lot. Amazon being green was really interesting to me because I thought this morning there are so many people willing to get back into Google, Microsoft, Amazon. We're seeing money leave the money market funds. That money's likely not going to go into the small tech speculative names. That money's probably going to go into some of the bigger names like an Amazon, like a Google, like a Microsoft. They're waiting for better entry prices. And Amazon at 149 is a better entry price than Amazon at 155. And some of that money is going to get allocated from that direction. You got to remember, if you're a fund manager as well, if you're a fund manager, you need to make a decision. And that decision is, when do I allocate the capital for my clients in order to get them some broader returns if they've not been allocated into this market? And if you wait too long, people at NVIDIA at 478, there's a lot of people that want to buy NVIDIA. There's just the street has 650 targets across the board on NVIDIA. 478 is way better than 500 or 490 buying it. So the question becomes, as a fund manager, do you pull the trigger? And I think a lot of fund managers are going to pull that trigger on behalf of their clients, because they don't want to be the people that got left out in 2023, always waiting for NVIDIA to come down to 300 or 200, or at that time, people are saying $80. They want to actually be able to buy it. Okay, so SoFi and Palantir are moving in the opposite direction. SoFi is actually down more, 9%. So SoFi is losing a lot of the momentum they had. They were trying to close in on $9. Palantir, way better momentum. Palantir volume right now, 5.9 million shares. SoFi volume, 10 million shares. But Palantir, having half the volume, is still up at $16.30. It was at $16.07 in the pre-markets. Now it's $16.30. Not bad at all for Palantir. It only down 1.85% on the day. SoFi being down 9% on the day. With in regards to SoFi versus Palantir. Look, it's not bad. And then you got good old Verizon. Shout out to Chris. Oh my God, this bad boy's closing in on 40 Dolores right now. The reason Verizon is doing that is because people are shifting from growth to value. Verizon has value, and on top of that, Verizon was so undervalued that it has share and capital appreciation baked into the fact that they also have a 6% dividend, along with the fact that people are chasing yield that is better and more safer. That's the key word. More safe, not more safer, but more safe that they could get from some of these equities that are obviously a little bit more volatile, like a SoFi and like a Palantir and like a Google right now as well. Robinhood recovering as well. Look at that. 1196 on Robinhood. Robinhood was at 11, almost 1140. Robinhood is making its way right back up to $12, or at least trying to make its way right back up to $12. Not bad at all. So, we're seeing some downside here, but we are still seeing a little bit more pressure as well come on these guys and try to maintain some momentum. Okay, so we have 1194 on Robinhood, Verizon at 3958. Beto is down a little bit. QQQ's MicroStrategy is down. Coinbase also recovering. Coinbase was at 146. Now it's at 152, down 2.9% on the day. So they're recovering as well. Celsius is down a little bit, 0.73% on the day. We got Coca-Cola moving. Let's go to Coca-Cola. That's another one I forgot to look at. That's a Buffett stock. Coca-Cola is up 0.41%. American Express, that's another Buffett stock. That one's down about 1%. Bank of America's down a little bit. Wells Fargo, I would imagine, is down a little bit. And Apple, I mean, that's another thing that's hurting Berkshire. Let's look at Berkshire. Where are they right now? You can't see them here. Let me look at my Robinhood. Apple being down, I would imagine, would make Berkshire be down today as well. Yeah, Berkshire is down just a little bit. Not too much. Just 0.21% on the day. All right, and we got Palantir. Where's Palantir? 1628, 1.72%. Not too bad at all for Palantir. We got a bunch of headlines I want to run through, but I want to click on something as well. I think we have the JOLTS report coming pretty soon. I think in 15 minutes, we're going to get the JOLTS report, which is a really important report in regards to jobs data and how long or how many jobs we have open. The more jobs we have open, technically not as good because that means unemployment is going higher. But the less jobs we have open, maybe not the best for inflation as well. So a bunch of different things we want to see is there. Speaking of JOLTS, let's get a little bit of coverage on what's going on with the labor market before we have the JOLTS data come out. Going to be a very key indicator this morning and honestly could tank the market a little bit more or could provide a little bit of a base for the market to recover. So here's an update on what's going on with labor, and then we'll get into the JOLTS report.
In the latest Fed meeting due today, investors will be watching for any clues about the timing and pace of interest rate cuts. Joining us on the markets, Emily Rowland, Co-Chief Investment Strategist at John Hancock Investment Management, and Jay Woods, Chief Global Strategist at Freedom Capital Markets. Emily, Jay, great to see you both. Jay, you look at the charts, you looked at kind of what happened last year and how we're set up to this year. What did you make of trading yesterday? Was there anything you could divine about small caps, large caps? Is it too early to say what the mood is like starting out 2024?
We're giving the run up going into the new year, and we're pulling back. I mean, the most obvious thing people said was this market was overbought, and it was. And now we have to just see if we can digest those gains, and this was just a normal pullback, which I believe it was, and set our sights to what are the next legs of this bull market that are going to lead. I like a lot of the setups that we're seeing. The S&P 500 getting very close to that all-time high. Ironically, it was on January 3rd, 2022. So it'll be interesting if we can go full roundabout 2 years later. But I really look forward to earnings season and what the financials can set us up with starting next week.
Yeah, you mentioned the legs that will lead to the next lead up. What do you think those might be? What will be leaders? Obviously, the Magnificent Seven last year, people saying shy away from those, that we're going to get a broadening this year, so look towards small caps. What do you think will be the catalyst or the stocks that will lead, at least in the beginning of the year?
Well, I still think technology is going to lead. Some of those Mag 7 stocks have pulled back, are basing nicely, and are poised to actually go higher. Of the seven, I think Amazon looks the best. It still hasn't made that all-time high, just trading at 52-week highs now, and it has a lot to reverse. As far as the next group of leadership, I look at the financials. I think when JP Morgan kicks things off, and I remember, I'm old enough to remember when Alcoa used to kick off earnings seasons, but now it's JP Morgan on the 12th. They're trading within $1 of an all-time high. That's great leadership in the financials. It was up 27% last year. I'm watching Bank of America closely, and then Citi. Citi's trading at 45. You know where it traded in May of 2011 when they did a 10-for-1 reverse stock split? 45. The stock has done nothing for years, and all of a sudden it stopped going down. It broke its near-term downtrend. It's got a lot to reverse. So I think over the long term, Citi may be poised to come back, and I think the conditions are starting to be favorable. You have a Fed tailwind. You have mortgage rates that are dipping, and with people with a recency bias looking to get into the mortgage market.
I think the point he's making on financials actually makes a lot of sense in the context of where financials are going. One of the key things about financials that I think a lot of people are forgetting about as well is that as interest rates come down, the hundreds of billions of dollars of losses that JP Morgan has on their balance sheets, and same things at Bank of America. I think Bank of America are now at about 112 billion. That starts to go down like instantaneously, right? It comes down because those interest rates get lower. The delta between where they issued the loans versus where the Fed's funds rate goes lower, and the tangible book value has to come up. So from that perspective, I mean, he makes a very interesting point that we're probably going to see a company like Citi get some momentum. JP Morgan, $1 away from all-time highs. The question becomes, is the financial sector ready to be able to take off against technology, which means investors in the broader market have to feel that financials, the regionals, the Bank of Americas of the world, the American Expresses of the world, the JP Morgans, the the Goldman Sachs, they have way more alpha baked into them than tech. Now, historically, that shouldn't be the case. Tech should have way more alpha than financials because tech is tech and financials are financials. Financials are not, the most beautiful businesses versus tech companies that have fixed costs and like these amazing margins. But tech has run up a lot. And because tech has run up a lot, it's hard to see that continuing to go. CleanSpark trying to recover. Let's look at CleanSpark real quick, and then I have some headlines I want to show you guys. Palantir 1630, not bad at all on Palantir. CleanSpark, look at that, only down 4% of the day, $10.42. Again, markets recover. Look, Google's green, Meta's green. What else do we have? Coca-Cola's green, Amazon is green, so some of big tech recovering. Hershey's obviously is green, Verizon is green, some of those value stocks are green. We still got a lot of red, but we do have a lot of companies that are trying to recover as well. Let's do some headlines on the day. Let's do some headlines, different things that we have going on across the entire world that are important to discuss. Okay, so some headlines. One quick headline from yesterday. This I didn't get to mention, but Fidelity reduced the valuation of X, which is formerly known as Twitter, by about 71%. They are a stakeholder. I think they bought like $30 or $40 million of Twitter when Elon was raising private money for that. So their downgrade, honestly, their valuation decline really just helps them revalue the company and value their books and help them get better multiples in the future. So nothing too crazy from there. But they have downgraded Twitter a little bit more. Now, Elon Musk, on the same day that they were that the valuation came down 71% by Fidelity, he said, "Sorry for our servers last week. Last week was an all-time amount of usage on Twitter," which is pretty incredible to see that happen. I mean, for Elon to say, sorry, it was, sorry we were slow because last week we had an all-time level of usage. I mean, it just shows that the platform is growing and it's growing pretty dramatically for them to have all-time level of usage includes since Twitter was started. And, that's why we're seeing some momentum there. So last week was an all-time high in usage on Twitter for Elon Musk. Let's go to SoFi real quick, and then I'll get into some of the headlines. You guys are seeing SoFi is down a lot more. SoFi now officially down. Is it 10%? Is it 10%? SoFi is officially down. Wow, 10%. This has got to hurt really badly. If you've got a very big allocation to SoFi, I mean, this is just annoying to see. There, SoFi down 10% on the day. I mean, it was just up 40%, and now you have a pretty significant pullback here on SoFi. That's tough, man. That is tough. It is very, very, very tough to see this. And all because of that analyst. I mean, that analyst wasn't the only reason, but obviously the macro is pretty tough, but that analyst definitely didn't help yesterday, setting the stock down about 2% on the day. Palantir continuing to be okay. Going the opposite of SoFi. Both of these companies shorted, but not as bad as we would imagine in the context of SoFi versus Palantir. Okay, some headlines I want to mention today as well. India manufacturing PMI is lower than it was in December. So we have a 54.9 PMI versus 56 a month earlier. Now, remember, if you're above 50, that means your economy is expanding. If you're below 50, you're contracting. India's PMI is incredibly important because India is going, and again, the PMI is just a measure of your supply chain, your laborers, your producer, your inventory, your imports, your exports, all the stuff that refers to how much a company or how much a country is actually producing. That is what the PMI basically entails. And you want to be above 50. Italy yesterday came in below 50. China came in above 50, and we really don't want to see China continue to have very strong levels because we're trying to leave China, right? Every company is trying to figure out how they can get into Mexico or India. But this report is really good for India because you want to see India have higher output because that means their economy is thriving. That means their democracy is growing. That means more businesses going to India. And that means there is a safe place potentially for Apple to take their supply chain, for Disney to take, for all these companies to start working in versus having to make their cheap goods in China because China obviously is going through a lot of political issues right now. So that's one of the headlines on India. So that was a really good news for India, manufacturing PMI. Another macro piece of news is the Turkey inflation rate accelerated to 64.8% in the month of December of 2023, the highest level since November 2022. November was 62%. It was up 2.8% higher in December. Housing and utilities was up 40%. Transportation was up 77%. Cafes, hotels, restaurants was up 93%. Food inflation also quickened to a 3-month high of 72% from 67% in the month prior. Consumer prices are up 2.9% month over month. Look, the only thing I can say there is that this is why it's really nice to not live in a country like Turkey, because at the end of the day, for all the problems America has, at least we are not having 70% inflation. So that is that is one of the things that's important to remember when it comes to this. And hopefully Turkey can resolve this stuff. It's just really tough to do it when you're not living in one of the more democratic parts of the world. And then finally, Germany's unemployment rate. So Germany's seasonally adjusted jobless rate ticked up to 5.9% in December 2023, which was an increase from the 5.8% figure that the market expected. It is the highest unemployment rate in Germany since May of 2021. Now, why does that matter? Since none of us are in Germany, or I mean, some of you might be in Germany if you're watching this, but a lot of us here are in the United States. Well, the U.S. has to make sure our unemployment rate does not tick to those 5% levels. Right now, Jerome Powell says that 4.1% will be okay. If we get closer to 5%, that means we have to cut interest rates a lot, and it's not for a good reason. It's because we are getting massive unemployment. So right now we're at 3.7% unemployment. That jobs data we're going to see a little bit later. The JOLTS data is going to let us know how bad it's getting, but we want to make sure that unemployment continues to not be as bad as it has been in other places like Germany. So that's why those Germany updates or learning about where unemployment is across the world is incredibly important to understand. Okay, what do we have? Sofi down 11% on the day. Are you buying Alibaba or Baidu? I am not buying Alibaba or Baidu. Let me know in the chat if you are buying any one of those guys. Wow, Sofi down 10.59% now. Yeah, I'm not Baidu is just like their Google. I don't really understand Baidu as much as most. I know it's just like the Google of China, but I've never been that interested in buying it. Alibaba, I understand, but it is a little scary to buy Alibaba. Again, we talked about it yesterday. Jeremy, Financial Education, buying 50,000 of Alibaba. You could argue it's definitely a bottom. The problem is just what happens when China passes some regulation that we don't like. That is the only problem when it comes to Alibaba. Moderna is down 3%. Nike's down 1.2%. Dollar General is down 2.3%. Pfizer is up 0.08%. Verizon 39.48, up 1.53%. Robinhood recovering a little bit, but still down at 11.90, down 3.8% on the day. Coinbase now recovering 3% at 151. MicroStrategy down 6%. Truist down 2.6%. And Bitcoin actually recovering a little bit, 42,314. It was down 6.7%, now down 6.4%, gaining about 100 points on the day. CleanSpark also 1050, down 3.59%. It's definitely a red market, but it's not a red market that is that dramatic for sure. Dario says, well, Italy hasn't been growing for about 15 years. That's true. And that's why I guess their PMI has been down again, as it was down last week. Enphase down 5%. Look, I mean, again, this is the theme of today's market. Is this dip actually real? Is this a dip that compounds, or is this a dip that gets bought up? I don't know. Look, if you put a gun to my head, I would say this is a dip that gets bought. I really do. Again, there is not a fundamental reason to have a sell-off outside of the fact that people want to take profits. That's really it. And again, the sell-off, I know we're saying it's a sell-off, but I mean, the S&P is down 0.48% on the day. The S&P topped at 478. We're at 470. That's not really a sell-off by any sense of the imagination. We saw what a real sell-off looked like back in October. Remember Halloween? We went from 460 to 410 on the S&P. That was a sell-off. I don't know, dude. I think the dip wants to get bought. I think there's people ready to put some money in these markets. We get better inflation data soon. We get the Fed minutes soon. We get better inflation data, and it becomes more obvious the Fed has to cut rates. Yeah, I don't know. I think it's going to be a much more of a risk-on environment versus risk-off, but we will see what that happens. Arnie says, in my opinion, a dip that gets bought as well. People are greedy. Yeah, look, I think people are greedy. People are greedy. And it's like, just imagine we get a reversal back to 17 on Palantir. You're going to get people saying, all right, fuck it, I'm going to buy it 7. It's just kind of the nature of how it happens. I mean, Palantir holding up above 16 is incredible. You would imagine they were at 1607 in the pre-market. They were just going to get a nice red candle down to that 1590 range. Nope. They said, we're not doing it. We are holding the line. Sofi, on the other hand, can't say the same. Down now almost 11%. Goodness gracious. I think that analyst who issued the sell rating is going to take credit for it yesterday. But this seems to be more macro than just that analyst as well. DNA's tanking. Where's DNA? Dude, I haven't looked at DNA in so long just because I just can't handle their earnings. They're down 5%. Yeah, if you look at DNA's earnings, they're absolute garbage. Ginkgo Bioworks has absolute garbage earnings. No one in their right mind would look at those earnings and think that this is a good stock to buy at this valuation. You would only be buying Ginkgo Bioworks if you believe the potential over the next decade is reasonable enough to have like a 20x, because that it's either going to 20x or zero. That's Ginkgo Bioworks, and it's going to take a decade to get there. But if you look at their actual earnings, I mean, like no one in their right mind can look at those earnings and tell me that at this valuation, Ginkgo's a buy. Like you just can't do it. You cannot do it. But if you tell me about the potential, I agree with you. The potential is there. And the potential can potentially lead them to a better spot. Okay, let's do word of the day, and we'll end out this red day. I'll be here for market close, so we will be here at 3:45, and we'll see how bad this market actually got, or if the market recovered a little bit from what we saw on the market open. Word of the day is avatar. Interesting one. Avatar, an image or other graphic representation that acts as a proxy for a person or is associated with a specific digital account or identity. It would be funny if we are all just avatars in the avatar world of the stock market, if you guys have watched the Avatar movie, and this is not actually the real stock market. We're just in the avatar version of it, and eventually we'll get back to the real version of it that hopefully won't be that red. We will see what happens. Thank you all for being here today. I will see you guys in a little bit, 3:45 on the market close, and we'll see how bad this market ends up going, or if we can recover just a little bit. All right, that's it for me. Thank you guys for being here, and I'll see you guys in a couple hours, and we will see what happens. Have a good one, everybody. See you guys at 3:45, and we'll see where it goes from there. Bye-bye.